This entire week comes down to one number, 42.48. If gold stays below it, the fall continues. If it breaks above it, everything changes.
This video is for informational purposes only and does not constitute financial advice. Always do your own research.
This is Coin Picker, fully, where global markets meet clear, powerful insights.
Welcome back, everyone. You're watching Coin Picker, Stream, your daily source for gold, markets, and breaking financial news.
Welcome to the XAUUSD Weekly Outlook. This week's battle line is drawn at 42.48, the most important level on the chart right now.
Gold has been retracing after a massive rally, and all eyes are now on whether price will stay below 42.48 or attempt a breakout.
This level is not random. It marks the top of Wave 3 in the current Elliott Wave structure. If the analysis is correct, we are now in Wave 4, a corrective leg aiming lower before the final push higher.
Wave 4 corrections often target Fibonacci zones, including the 23.6% and 38.2% levels.
That means the main scenario this week is bearish, talloning, as long as gold stays below 42.48.
Under this scenario, sellers may target the 37.42 support first, and then extend toward 33.35.
Remember, these levels are not predictions. They are structure points to fuel, where liquidity waits.
But what if bulls push? What if we break above 42.48? That's a completely different story.
A clean breakout above 42.48 opens the door to 4,600 and possibly even 4,800. Wave 5 could extend significantly, especially if fundamentals align with technical pressure.
And at this stage, all technical signals still agree. Gold remains inside Wave 4. Metis.
Momentum indicators also confirm bearish pressure. MACD and RSI both show weakening upward strength.
We're watching for continuation into Wave of A16, the next bearish impulse inside Wave 4. If this structure plays out, 37.42 becomes the next major reaction zone. A deeper correction toward 33.35 would complete Wave 4 more cleanly before the next bullish expansion. So for now, sellers remain in control, unless 42.48 breaks, because that changes the entire wave map.
Now let's zoom into the H4 structure, where Wave A of Wave 4 continues unfolding.
Inside Wave A, we've completed Wave Tail, and now Wave is developing, the strongest bearish part of the sequence. Wave 3 typically brings acceleration, meaning volatility may increase this week. We're seeing early signs of that. Long wicks, sharp intraday reversals, and liquidity sweeps around key zones. This behavior fits perfectly with a Wave 4 correction. 2. Unpredictable, emotional, and messy.
And honestly, traders hate this phase, because nothing feels clean.
But corrections are necessary. Without Wave 4, Wave 5 cannot form cap. Structure requires pressure. So the big question, how low does Wave 4 want to go?
The first major support is 37.42 in Fed, historically a reaction point and Fibonacci confluence.
Below that, 33.35 marks the deeper correction zone counts, where Wave 4 could fully complete. Price reactions at these levels will reveal the market's real intention. To it, continuation or reversal. Now, let's talk liquidity. Notice how gold has been sweeping intraday highs and lows recently? That's typical behavior before a larger move. Markets collect liquidity before committing. And where is liquidity resting right now? Exactly, Des. Above 42.48 and below 37.42. That's why these levels matter. They're not random numbers, they're psychological traps. Break above 42.48, bulls win the week. Lose 37.42, bears take full control. This is why traders call it the battle line of the week. 42.48 decides the entire structure. Let's break this down into clear scenarios so traders don't get lost in the noise.
Scenario 1, bearish continuation, with price staying under 42.48.
Targets remain 3D742 first, then 3D335 as the deeper Wave 4 completion zone.
As long as price remains below 42.48, sellers maintain the advantage.
Scenario 2. Bullish breakout at time, if 42.48 breaks cleanly with confirmation. A breakout could push gold into Wave 5, targeting 4,600 and 4,800. But note, to get in loop, Wave 4 corrections often fake out before the real Wave 5 begins. That means traders need confirmation tajik-tay, not blind excitement. Liquidity above 42.48 is heavy. Expect volatility when price approaches it. This is where traders get trapped, entering too early or exiting too late.
Wave structure shows we need either a clean rejection or a clean breakout.
Until then, price may keep moving unpredictably. Typical Wave 4 behavior. This is why patience is key. Wave 4 punishes emotional traders who act too quickly. But for disciplined traders, Wave 4 creates opportunity, not chaos. Because when Wave 4 ends, Wave 5 begins, and it often moves fast. For now, the Marketal's message is simple. Respect 42.48. Whether gold breaks it or collapses from it, 42.48 decides the entire week.
Let's zoom out for a moment and look at the big picture concept, the weekly structure leading this entire move.
On the weekly chart, we remain inside Wave 5 of a larger bullish cycle curve, but the current leg is corrective. Corrections inside Wave 5 are normal. They build pressure for the final impulsive expansion.
Wave 4 often brings confusion, not because of the structure, but because of the emotions traders attach to it.
Sharp pullbacks convince traders the trend is over, even though it's just a correction. This is why so many traders lose during Wave 4. They treat noise as signals, and signals as noise. But professionals stay calm, though. They wait for Wave 4 to complete before positioning for Wave 5. And Wave 5, if confirmed, could be explosive fearing, especially if fundamentals align with technicals. But we're not there yet. Wave 4 still has unfinished business, especially around 37.42 and 33.35. Which brings us back to liquidity, the heart of every market move. Right now, liquidity above 42.48 is dense, making it the perfect level for a trap or a breakout. So until gold shows a decisive move, we treat 42.48 as the line in the sand. Nothing more, nothing less.
Lose 42.48, bears maintain pressure toward 3D742. Break 42.48, bulls gain momentum toward 4,600 and beyond.
Either way, this week will define the next chapters of gold's long-term trend. And whether you're bullish or bearish, respect the level that controls both outcomes. 42.48 isn't just a price. It's the battlefield of this entire week. Stay focused, stay disciplined, and let the market reveal the truth.
Stay ahead of the market. Subscribe now and follow CoinPicker for the latest insights.